The vicious down cycle for PayPal is continuing after hours today after they reported their Q4 2023 earnings and their full year 2023 earnings after the bell today. As of recording this video right now, they're wrapping up the Q&A on the conference call. Just finished listening to that, and we're down about 7% after hours, all the way down into the $58 range. This stock has been in a terrible spot since mid-2021. If you bought at the highs of the COVID highs, mid-2021, you'd be down almost 80% on your shares right now. If you bought 5 years ago in February of 2019, you're down 31% on those shares. And if you bought 1 year ago, you're down over 20% on your shares. Not looking good for PayPal stock price over those different spans of time. But if you didn't know this already, PayPal has an entirely new management team, a new CEO, a new direction, and a new vision, okay? They talked about that a lot on the conference call. And I think there was some very important things that we need to chat through in the video from that conference call. And of course, we got to go through the numbers that they just reported for Q4 of 2023 and full year 2023. So we're going to get into all that in this video. And we're going to talk about what I'm doing with the stock as a result of today's earnings. Does it change my view? Am I still buying? Am I going to sell my shares? Am I going to stop buying? We'll talk about all of that in this video. But first, before we get into all that, if you're new here, I'm Austin. I'm a co-owner at cloudmusicsuite.com. I'm also a stock market investor, okay? Most importantly for this video though, I'm a PayPal shareholder. I started buying PayPal shares in 2023, and frankly, the stock has gone nowhere since I bought those shares. We'll talk about whether or not I think that's an issue here in a little bit, but if you're not subscribed already, become one of those almost 3,000 subscribers. Help us hit that goal of 3,000 subscribers and drop a like on the video for me. Means a lot to me. All right, let's get into it. Before we dive into the numbers for Q3 and the commentary from the conference call, I want to talk about the price action. So I opened my brokerage app at right at 4:15, and I was like, wow, PayPal's up 9% right now. Going to be a crazy day tomorrow. That's a nice market reaction to the earnings. Let me go check them out. So I open the Safari app, I start reading through the earnings, I'm running through the numbers, I'm taking notes, I'm doing my whole thing. And then before the conference call started, I checked the stock again, and it's in the $62 range. I was like, what the heck happened? So I wanted to see a minute by minute and see what happened with the share price. So on TradingView, you can see a minute by minute. 4:15, we spiked all the way up to $69.41. And literally 1 minute later, the stock was all the way down to $59.84. That is some crazy price action. I don't know what was going on. I don't know who was buying that crazy amount of shares and then dumping that crazy amount of shares, snap of the fingers later, 1 minute later. Probably wasn't the same person, probably wasn't the same firm. Maybe it was algorithmic trading. I don't know what the specific case was, but that was definitely really weird. And now we're chilling around $58.55. We're accelerating to the downside right now, $58.55 after hours. So definitely an interesting price movement, but what was in the report and what was in the earnings call that we need to talk about? Let's go ahead and look at those now. We'll start with the headline numbers, okay? Q4 2023, net revenue increased 9% on a spot and foreign currency neutral basis to $8 billion. Transaction margin dollars of $3.7 billion was flat on a year-over-year basis. GAAP operating income increased 39% to $1.7 billion, and non-GAAP operating income increased 11%. GAAP operating margin expanded 468 basis points, very respectable, to 21.5%, and non-GAAP operating margin expanded only 39 basis points to 23.3%. And then GAAP EPS increased 61% to $1.29 in the quarter. Non-GAAP EPS increased by 19% to $1.48 in the quarter. And they've got a note in the fine print down here that says Q4 2023 GAAP EPS includes a negative impact of 1 cent per share from PayPal's strategic investment portfolio and a positive impact of about 25 cents per share on the gain from selling Happy Returns. If you don't know what Happy Returns was, it was a business that PayPal owned, they got out of. I'm happy they sold the business and got some profit out of it. For full year 2023, which they also reported today, obviously, net revenue increased 8% on a spot basis up to $29.8 billion. Transaction margin dollars decreased 1% to $13.7 billion. GAAP operating income increased 31% to $5 billion. GAAP operating margin expanded 259 basis points to 16.9%. And then GAAP EPS increased 84% up to $3.84. In Q4, the total payment volume on a spot basis grew by 15%. And then full year 2023, total payment volume on a spot basis increased by 13%. Pretty good. And then here's the first thing that we see that's really not that good. Active accounts decreased once again by 2% to 426 million, and that seems to be on a year-over-year basis. So they still have those active accounts decreasing. When is the active account decrease going to stop? That's an interesting question. That is one that Wall Street definitely wants to know. If we keep on seeing active accounts dropping and dropping and dropping quarter in and quarter out, this management team that's saying they're all about innovation, they're all about strategic growth, if we can't increase active accounts, we're probably not going to increase strategic growth in a major way. So that's something that definitely needs to change looking forward through 2024. Let's jump down to the balance sheet real quick. Cash equivalents, and investments totaled $17.3 billion as of the end of the year, and debt totaled $11.3 billion. That's a pretty substantial increase from about $10.64 billion at the end of Q3 2023. I don't know what we're doing having total debt numbers increase on a quarter-over-quarter basis like that. Not what I wanted to see. I've been talking on multiple videos now about how I want that debt number to come down to $9.5 billion, $9 billion, maybe $8.5 billion. They could absolutely do that if they would take some of their share buyback money and pay down some debt with that money. I would love to see that, but now we're expanding the amount of debt we have. Not what I like to see. Speaking of repurchases, which I understand the value of repurchases, and I'm all here for repurchases, they repurchased $5 billion of stock in full year 2023, and they repurchased about $600 million of stock in Q4 of 2023. So most of those repurchases came earlier in the year in 2023, obviously. And don't get me wrong, I love to see repurchases because it helps those EPS numbers look way, way, way better. If we take shares off the market, total shares outstanding, then the EPS numbers, even if the net income isn't rising crazy, the EPS can be rising much faster because they're doing that share buyback and taking shares off the market. It seems like they're slowing down that share buyback in a major way, all the way down to $600 million. Maybe they can start to take some of that and pay down that long-term debt. I would love that, especially in these high-rate environment times. To be packing on more debt is not what I wanted to see in this report. And then let's get into guidance. Guidance can be one of the biggest things that moves a stock price after they report earnings. So Q1 of 2024 guidance, net revenues expected to be 6.5% up on a spot basis. That's not what we want to see, especially for a company who now has a management team that's talked about all this strategic growth, innovation, driving new growth of the business, focusing the efforts on the highest growth potential areas, right? That's not what we want to see, a 6.5% on a spot basis. I wanted to see a 10% plus on a spot basis. So I'm definitely disappointed in that. We'll see what happens throughout Q1 if they end up beating revenue, but that would be a substantial beat for them to come in at 10%. I think they'll be pretty close to that 6.5% number. I don't love to see that. And then the only other Q1 number I'm going to talk about is that GAAP earnings per share number. So the GAAP EPS is expected to be slightly higher than 70 cents per share. I don't know why they worded it like this. They said increase mid-single digits compared to 70 cents in the prior year period. We could have just said we expect it to be somewhere between 74 and 77 cents, whatever. But anyway, those GAAP EPS numbers are fine. Before we even get into full year 2024 guidance, I would say a lot of the downward move after hours is based on the weak guidance. This is not great guidance that we're looking at here for a company that says they're all about innovation. They made a whole presentation. They went live on YouTube, and Alex Chris is talking about all these different innovations. Seems like those innovations aren't going to hit until back half of 2024. We already kind of knew that, but this is weak guidance even with taking that into account. Now let's move to the 2024 full year guidance. One thing that's, potentially a red flag, they did not give revenue guidance for full year 2024. At least I didn't see it. I didn't find it anywhere. Maybe I'm wrong. If you found it, let me know. But I didn't see any full year 2024 revenue guidance. All I see is EPS guidance. And in that EPS guidance, they're saying it's going to be down on a year-over-year basis. This is with cutting employees, right? If you didn't see this about a week ago, they said they're laying off a substantial portion of their staff. I think that's actually a good thing. It's going to lead to EPS numbers being better than they would have been if they would have kept those people. They're going to be able to use the money that they were going to pay those people and invest into innovation, right? And there's one more point about why that's good, but let's stay on the EPS numbers for a sec. I expected EPS to be definitely well above 2023 when we're looking at full year 2024. Maybe it's going to play out like that, but this guide is pretty weak at $3.60. They try to do a little saving face by saying two very factual things. The sale of the Happy Returns business gave them about 24 cents of EPS in 2023. And then they say that PayPal's strategic investment portfolio gave them a gain of 14 cents in 2023. So when you take those two things out, then technically earnings on a year-over-year basis from 23 to full year 24 would actually be up about 16 cents per share, but still not exactly the GAAP EPS numbers I was looking for in terms of the guidance. So we're going to dive into some nitty-gritty numbers, but it's really that guidance that seems to be the big thing that's moving the stock down. Because if PayPal is going to have a weak year in 2024, and they're investing in all this innovation, that means probably the EPS numbers are not going to be as good as we want them to be, and the revenues are not going to be as good as we want them to be, and as good as the management team has basically gotten everyone excited for. Alex Chris went on CNBC and said we're going to shock the world, and now we're going to have revenues up 6%, you know what I mean? And we're not even going to guide for 2024 full year revenues. Not a great look so far. Something important to remember, I know I seem very negative right now, but those are very short-term things. The next 1, 2, 3 quarters, those are very short-term. I don't plan on selling this stock in Q3 of 2024. I plan on holding this through 2024, through 2025, and probably even through 2026. That's my time horizon with PayPal. So I do believe that the investment that they're making in the business over the long term and over the medium term even is going to pay dividends in a nice way. It's going to increase revenues in a nice way. It's going to increase EPS in a nice way, because it seems like this management team is really taking the time to say, hey, the business is too big. They literally talked about that on the conference call. It's too big organizationally, basically meaning it's too bureaucratic. It's too many checks and balances. It's slowing down innovation. We need to pare the size of the team down. We need to bring the tech team down. We need to bring all the teams down, pare them down, keep our best employees so that we can really focus on the mission and kind of cut the dead weight. They didn't say those words, cut the dead weight, but that's my words, right? They got to cut the dead weight. They got to get rid of the employees that are not really adding to the mission. So before we dive into a few numbers, my personal sentiment is that the next 1, 2, or 3 quarters are probably going to be pretty weak. Q4, we're going to start seeing the revenue come through and the profitability come through on all the things that the management team is actually going for. So if you were just looking to be in this stock for the next 3 quarters, I don't think it's going to be a pretty time for PayPal over the next 3 quarters. If you're looking to be in this stock for multiple years, I think you could be rewarded in a pretty major way if you're in for the next 3 years, if the management team is able to execute on what they believe they can execute on and what I believe they can execute on. But to be a little more on the positive side in the short term, the quarter they just reported, Q4 of 2023, in comparison to Q4 of 2022, was so ridiculously much better than that 2022 final quarter. Check it out right here. Pretty much every metric increased ridiculously. Year-over-year growth numbers on total payment volume, 15%, net revenue, 9%, transaction margin dollars, totally flat, operating income, almost 40%, operating margin, 468 basis points, net income up 52%, earnings per diluted share up 61%, and net cash provided by operating activities 64%. So those are all GAAP numbers. On a non-GAAP basis, let's just jump down to the net income. Net income's up 13% on a non-GAAP basis, 19% earnings per diluted share, and 72% on non-GAAP free cash flow, and way down on the adjusted cash flow at 46%. Due to the holding of sale for those buy now, pay later loans that they announced mid-year of 2023. So what do I see for 2024? Where do I think PayPal's going, and what am I doing with the stock as a result of these things? I believe sales and marketing expenses are going to go up in 2024. I believe research and development, meaning technology and development, is going to go up in 2024. I believe G&A will hopefully be flat for 2024. They are bringing the size of the team down, which means they have to pay less people, which means they can retain a little bit more money or take that money, invest back into the business, which can create way more value if they're able to invest that money appropriately into innovation, into things that are going to bring them more revenue in the future and way more profitability. The new management team seems like they're actually trying to pare down the business and focus on what matters. They said multiple times on the conference call, we have too much going on at PayPal. There is way too much going on. We need to focus the team. There's just so many different things. And basically they're saying no innovation's happening. We're moving way too slow because there's so many things that are distracting us from the core mission and the things that are actually going to bring real growth to PayPal. That doesn't happen in the snap of a fingers. That's going to be the process that they have to go through throughout all of 2024. I think they're going to keep on trying to control costs so they can keep the EPS numbers pretty good, in line or a little bit above in line when you take out those one-time profits from the Happy Returns and the PayPal strategic investment portfolio. But in terms of growth this year, Q1, Q2, Q3, I doubt we're going to see much revenue growth. I doubt we're going to see crazy net income growth. Starting in Q4 of 2024, if all goes well and they're able to execute on this plan and Alex Chris is able to lead the team and truly bring new innovations to the legacy PayPal business, focus on productive growth and profitable growth at Braintree, which they also talked about on the conference call, and keep on innovating with Venmo, then I think it's going to be a really bright future for PayPal. But I don't think that bright future is going to start to come through in the numbers until late 2024, and we're not going to see the stock price move up massively until it comes through with the numbers. If they start changing their guidance, they update their guidance for full year 2024, or they update their guidance as they move from one quarter to the next, that can move the stock price higher. But really, we got to see the numbers come through in order for PayPal to actually get respected by the stock market. Wall Street hates this stock right now. Retail loves this stock right now. It's probably a good time to pick up PayPal shares if you're in the stock for the long term and if you believe in the management team. The valuation is hard to argue with. Roughly a 19 trailing PE, about an 11 or so forward PE, and then even more impressive than that, the price to earnings growth of 0.5, guys. That's ridiculous. So basically what that metric says is that we are not factoring in, we meaning the market, the street, right? People who are buying the stock right now, where the stock price is trading, is not taking into account earnings growth in the future, okay? So that PEG ratio of below 1% at 0.5 and even lower than that after these earnings came out, because we have like an 8% downward move, really, really enticing. It's hard to disagree with what's going on here. Even if they have a really boring 2024, the stock price is probably going to get respected over the medium and long term. I think they're going to have a really nice 2024 toward the backside, okay? That's when the numbers are going to start coming through. It could be a dead few months for PayPal. The management team has got to take hold of this thing, and they got to take hold of it fast in order for the stock price to stop dropping, or in order for it to stop being range bound in this 55 back close to 65, back down near 55, back close to 65. It's been in this range for quite a while now. I don't think we're going to gap lower or anything like that, but I think we're going to stay in that range for quite a while, and probably nothing inside of Q1 is really going to move us up massively in any crazy kind of way. So what am I doing with PayPal shares? I'm continuing to acquire PayPal. My plan has not changed at all. Yes, the stock dropped 8% after hours. I'm not selling into that weakness. I still hold 100% of my shares. I did not buy more shares today. I wanted to wait and see what happens with these earnings. I'm glad. I'm going to buy a decent block of shares tomorrow whenever the market opens. So yes, I wish the guidance was stronger in Q1 of 2024, and I wish they would have given revenue guidance for full year 24, but it's possible that they don't even know. They don't even know how much these innovations are going to change the revenue outlook for PayPal. I still believe in this company as a big turnaround play. I don't think this is going to be a crazy growth engine, and that is evidenced by the fact that they guided for 6.5% revenue growth. That's not a revenue growth beast. It's really not even an earnings growth beast based on the guidance that they gave either. But what it is a turnaround play. It's a deep value play, a PEG ratio of 0.5, forward PE of about 11, trailing PE of about 19. That's considerably lower than the market, and that PEG ratio specifically is much lower than 1, which means we're not taking into account that future earnings growth. So my really short summary is that PayPal's still undervalued. I'm still buying. I'll still be buying at least through Q1, maybe even through Q2. It seems like I'll probably continue to pick up shares through Q2. I want to know what you're doing out there with PayPal. Are you buying right now? Did you sell into this weakness? Do you think PayPal is done for? Are you playing any option plays out there? I want to know. I want to hear about it. Let me know in the comments down below. I appreciate you for being here in a major way. Thank you so much. Have a great night.